Good morning, welcome to this update on Monday the 8th of August, brought to you by Phoenix Blue. I'm Tom Colley and I'll talk to you about the markets and the news this morning. Big news on Friday was obviously the non-farm payroll change. We saw some really strong numbers in at 255,000 jobs added against a forecast of 180. We also saw an upgrade on the previous month's figures, which had been really stunning at 288,000, but have been revised upwards to 292. So a really, really positive picture there following May's figures, which when originally announced were down at 55,000 and came as a bit of a shock to the market. We also saw average earnings rising 0.3% against a forecast of 0.2, and this is something that we've been watching over the last 6 months or so, and seeing equally significant as the non-farm numbers themselves. The employment rate rose from 4.8 to 4.9, but we don't tend to focus on this quite as much. We also saw a rise in employment participation. That means there are a bigger proportion of the US population in employment, and a rise in hours worked. So across the board, pretty positive numbers from the States there, and we saw a reaction in dollar strength, and that's one of our main focuses for the week ahead, to see a follow through in that dollar strength and take advantage of that accordingly. The only news for today was already out. 4 o'clock this morning, we had the trade balance from China at 343 versus a forecast of 313. So decent figures there. Although at this moment in time, China doesn't seem to be in the picture from a trading perspective as it was 6 to 8 months ago. The stock market is steady. The yuan valuation, or the yuan US dollar exchange rate, is working somewhat within a range. So hence we haven't been focusing on that. We've still got that in the back of our mind, and we'll be bringing your attention to it should it become significant again. Okay, this is the US dollar index, leading into non-farm, which is this big bullish bar here. We had a couple of bullish days, presumably upon expectation from those figures. Nice bullish day on Friday. We're starting off in the same direction here. We are looking for this dollar strength to follow through this week. The US economy is the only bright light, if that's the way to describe it, out of all the economies of major and minor currencies that we trade at this moment in time. So we will be looking to trade weaker currencies against that US dollar strength this week. The first of those, the yen. We saw the yen finding a base around this level, about 100.80. I am currently looking to take further trades long from this level if we get a pullback into there. Alternatively, we'll be looking for a break above this level at 103.50-ish pullback to take this to the long side to see if we can break out of this channel finally. We have had disappointing information out of both the Japanese government and the Bank of Japan recently in terms of measures to ease the currency or ease rates, increase inflation in the economy. So we will be watching this, but until we really break this long-term down channel here, we are looking to trade somewhat cautiously. Over on the pound last week, obviously we had a rate reduction on the pound. That bar there's Thursday, that shows that. We had a pullback into this level, retest of the triangle. Would have been a lovely trade, but was really messy in terms of the timing of that happening, so we didn't get the opportunity to trade that. We're now down at this next level of 1.3080. We're looking for a clear break below that on the daily chart now, pull back into that potential low side or downside to this market, brought on by follow through from the interest rate move, but also if we see concerted dollar strength, that's obviously going to support that move as well. Now over on the Aussie, we had a rate reduction on the Aussie also, but we haven't seen any significant sell-off yet in response to that. The market hasn't moved away from its highs. We are short this market. But interestingly, even though rates have been reduced, we still haven't broken below the point of control of this triangle. Sorry, this isn't all on your screen there, but basically where the triangle comes to a point, that's the point of control, and we're still sitting above that. This is a reflection of how little moves by central banks are actually causing reactions in the marketplace. Also to bear in mind, on the Aussie and the New Zealand, they still have higher rates, considerably higher interest rates than the rest of the world, so they will still attract funds on the basis of that interest rate yield. Now, over on the New Zealand dollar, on Wednesday we've got a rate announcement. Again, as per the Aussie, we would not be at all surprised to see a 0.25% rate reduction in line with the Aussie. For that reason, we're looking to get into this market, ideally have a trade open with no risk on the table, so that if we get that rate reduction and we see the follow through, we'll be taking advantage of it. But if it doesn't happen and price goes to the long side, we won't be losing anything, because we don't want to actually trade risk on the news event. We will happily trade open trades with no risk on the table into decisions, because we've nothing to lose. We're either out at break even, or we take advantage of the resulting move. So short this market if we can be, with no risk before the announcement on Wednesday. The other area that we're really looking at this week is we've seen a clear return to a risk-on environment. That means long equities. You can see here that the S&P is making new highs. It closed at a new high close on Friday. We'll be looking for support to trade this long, both intraday and end of day, because our bias is now long this market, having made those highs. If you look at the Nasdaq, you'll find that that's broken its previous high much more significantly. And we're also looking at the FTSE. That's broken a level. We expect long side to the FTSE following the rate reduction from the Bank of England on Thursday. On the counter side to that, we're obviously looking to be at short safe havens, short metals, particularly gold and silver. We're already short gold from this level here. I've just taken another couple of trades intraday through this retest of this channel through here. I'll be looking for a break below this double top neckline here and a retest of that to take this market further, looking at targets of around 1250 in the first instance. Don't know that will be some result of the pullback, but it's a significant level, so I will take risk off the table, take profits at that point, and then potentially look for either an upside signal or downside following a break and retest of that at 1250. We are looking for this market to pull back. We have commitments of traders, extreme signal that says this market should be pulling back, but we are cautious. Bear in mind we're at record highs in the stock markets, and we have had a signal from really through this area here, from the commitment of traders report, saying that this market needs a pullback, and clearly it hasn't done that, and won't really do that before we get down to this level. But the question then is, how far will it pull back? We're also short and watching silver in this respect. We're also short both platinum and palladium. All those metals have got extreme signals and have given good reversal signals, so we're looking to take advantage of those into dollar strength, and also because of the commitment of traders, signals that we've had there also. So two big things this week, looking for dollar strength to play out, and also looking at a risk-on scenario on equities and safe havens. Now, if you like the way we look at the markets, we analyse fundamentally, we analyse technically. We don't use indicators on the charts. You'll see them very clear. We simply trade from levels. We also trade with the analysis of the commitment of traders and also seasonality. Now, if you want to know more about this, we've got a free trading afternoon on August the 24th in London. That will be an opportunity to trade alongside our two most senior traders here at Phoenix Blue. As many questions and answers as you like. There'll be an introduction to commitment of traders and things like that. So if you're able to come along, just visit the website, register your interest, and we'll send you an invite with all the necessary details. Okay, guys, that's it for today. Looks like it could be an interesting week ahead. Let's look at those. Let's hope those two scenarios play out, and we'll talk to you later in the week. Take care.